Welcome to another weekly portfolio update here on The Last Investor. My name is Dan and thank you very much for joining me on the show. Today I'm going to give you an update on my portfolio. I'm going to talk about the recent stock market rally and also talk about my strategy for rebalancing my portfolio, which is something we should always aim to do, especially in the current environment with things changing rapidly. And it's just important to know where things are going at any given time and be able to ensure that your portfolio adjusts to the changing climate. But of course, not too much change because that can also be a bad thing. So now on to the update on my portfolio. So as you can see, my portfolio for the very first time since the market crash, my portfolio is back in the green. I'm up by £23.58. Not much, but it's still a positive sign. It's a good sign, that's for sure. But of course, the £23 question is whether it's going to remain in the green and continue to go further into the green. But for my portfolio, in reality, it's been a bit of a mixed bag. Looking at CRISPR Therapeutics, for example, in the last 7 days, it's gone down by 6%, and Rio Tinto in the last 7 days, it's gone up 3.6%. Carnival Corp in the last 7 days has gone up significantly. It's gone up 26.18%. And that's huge for my portfolio because that means it's cut my loss in effectively half. So that's been significant for me and it's accounted for a lot of the gain that I've now seen and effectively put me back into positive territory. Sentiment has also seen a little bit of a decline in value. It's gone down 12%, and sentiment really has an inverse relationship with the stock market because it's a mining stock, and gold is one of those commodities which tends to go up in value when there are problems in the market and go down in value when the stock market seems to see a rally. So that's an understandable situation. And of course, I'll continue to hold sentiment because it's a fantastic stock because it maintains value over time in any event. As you can see, I'm still up on the whole 33% on sentiment. Crest Nicholson has gone up in the last 7 days by 10.4%. Again, quite significant, but it's still down overall for me by 41%. So it's still £117 loss at the moment, or in the red should I say, because obviously I haven't taken the loss yet because I haven't sold it out. So that's obviously one I'm waiting for to go into the green before I sell it. So that's the situation with that at the moment. Great Land Gold continues to maintain a really high performance, up 142% as far as my portfolio is concerned, at £71 made. But in the last 7 days, it hasn't been able to join the others in terms of significant growth. It's only gone up 3.27%, but it's still a significant increase nonetheless overall, and maintaining that very strong growth that it's had and surge it's seen since the beginning of the year. Nevertheless, there has been some shift and change in my portfolio. I've bought some new shares and I've sold some shares as well. So just to walk you through some of those. Xilinx is a share that I purchased around the 27th of May. I bought £99 worth of, actually £100 worth of shares. It's gone up a bit slightly since then by 4%. Xilinx is one that I propose to hold for a long time. They actually pay a dividend, but not a significant amount of dividend. The dividend is roughly around 1.59% yield, but nonetheless it's still a great thing that it pays a dividend. The company really is closer to being a growth company rather than a dividend-paying company. Although it's been around for a significant period of time, it's been around since the early 90s, it's really a company that has a lot of headroom for growth because of the area in which it specializes. It specializes in developing and creating chips and other devices, especially now around the 5G. It's recently partnered up with Samsung and will be building out all of the technology that's going to be used in the 5G network and devices for Samsung. So that really is a positive going forward. I think what really surprises me about the whole 5G thing is the fact that there's been this craziness around thinking that 5G is some sort of cause for coronavirus or has actually caused the coronavirus, which is absolutely mad. But nevertheless, we've got these issues which are still going around. There's a lot of mania around this, and God only knows how long that's going to go on for. Hopefully, a lot of people will come to see sense and realize that 5G technology itself is good for us. But I suspect that in the meantime, this may well impact on, I don't know, it may not necessarily impact on the shares of 5G, but or even the adoption of 5G. But there is a huge amount of misinformation out there, which is quite surprising, and how long and especially for how long it's been going on for. Anyway, back to Xilinx. That really is a company that I will be investing in long term going forward. I'll be purchasing a lot of shares and try and get it up to about 10% of my portfolio. The next stock that I purchased was JLEN Environmental Assets Group. I purchased £200 worth of shares in this company. The company is a company that invests in renewable energy. It in fact owns a lot of assets in wind, solar, waste and wastewater and hydro, so quite diversified really in terms of its renewable energy assets. The company also pays a dividend, quarterly dividends, and its dividend is around 5.67%, which is quite a good amount of dividend to be paid. I really like the company as well. Similar to Trig, I think that renewable energy is the future, and companies heading in that direction, as far as I'm concerned, they are on a long-term trajectory to significant growth and success, hopefully. So I'd like to jump on the train at this stage where the mania and euphoria around renewable energy is still not quite as where it should be. And finally, the last stock that I purchased was Bluefield Solar Income Fund. I purchased this pretty much around the same time that I purchased JLEN, and that was also for £200 worth of shares. Now, similar to JLEN as well, this is also a renewable energy company and invests pretty much in solar. But it's also a relatively new company to a certain extent, and it pays a dividend, and its dividend is around 5.73% yield. So that's also very, very good. And hopefully this will be another company that grows very quickly and also grows very consistently and steadily. Its dividend is very new. I mean, it's only started paying dividends around August of last year. So in terms of a track record for paying and maintaining dividends, that's yet to be seen. But nonetheless, I have a lot of high hopes for renewable energy companies, and if there was one to speculate on or even take a bet on, it will be this rather than big oil. So there we are. So in terms of the stocks that I have sold out of Bellway. As you can see, I've sold all of my stock, which was worth £251 in Bellway. I have a little bit of a bittersweet feeling about that, because actually I still believe in Bellway as a company. It's a really good company, it's got solid balance sheets. The only reason why I've sold out of this is because I really honestly don't know how the current economic climate is going to impact on the construction and building industry as a whole. That is why I'm doing that, and if there is some difficulty in terms of my understanding of where a company's future lies, then I am investing my hard-earned money, and I want to make sure that my hard-earned money is not lost. And so I will only be investing in companies that I actually have a lot of belief and have no doubt as to, in my mind, certainly as far as I can have any clear outlook on the company's potential future. But if I have any doubts in my own mind, then it's my own money. I have to make sure that's right for me. So in this case, I'm not really clear about the outlook for the building industry. It may well be okay, it may well be fine, and it may well just be some paranoia on my part, but I just feel more comfortable investing in other companies, which I have seen, especially as those ones I've just mentioned above. Next, I have also sold some shares in Rio Tinto, 4 shares to be exact. So that brings my total number of shares in Rio Tinto to approximately 20 shares left. And the reason why I sold some shares in that really is just to balance out my portfolio and bring that down close to a 10% holding, because prior to that it was quite a significant portion of my portfolio, and I really wanted to maintain that 10% maximum share of my overall portfolio. And the same for CRISPR Therapeutics. I sold 7 shares in that, also around the 18th of May, and I made a little bit of profit on that, but that was fine. But again, it was more rebalancing my portfolio and making sure that I don't hold more than 10% of my share in any 10% of my overall portfolio in one single share. So there we are again. That's now closer to 10%, which is good. And of course, those remain a continued long-term hold for me. Then I sold out completely of my stake in Monday, and I've always wanted to do that. And as soon as it went into the green, I did exactly that. So that's now done. So I'm getting closer and closer to what my overall ideal portfolio should look like in the current situation, whereby I'm trying to rebalance my portfolio. The other stocks I would like to sell in due course, as I said, is BHP, and that's getting closer to going into the green. It's currently 15% down. Same for Crest Nicholson. That's a long way away from going into the green. It's 41% down. And Carnival Corp and 3i. So there we are. So that's my portfolio for now. So what I want to do now is just very briefly talk about what's been happening over the past week. For me, it's been a little bit crazy because we had this report come out on Friday about the jobs, and I think the expectation has been that there's going to be a significant increase in unemployment in America. And the expectation was that it would be probably around 20% unemployment. But in fact, there was a net increase in jobs by 2.5 million. So 2.5 million people gained employment overall in comparison to the unemployed. So that's crazy, because they were expecting a net loss in employment, but that's now proven to be completely different. So that means that the unemployment data is at the level of unemployment is 13% and nowhere near the 20% that was currently being predicted. So I think that has contributed to the significant rally we've seen over the past week in the stock market. And I think it seems that every good news has been jumped upon, and it's just driving this crazy rally in the stock market. The other news that came out as well was around airline stocks, and there was this news that came out that American Airlines and a couple of other airlines were looking to reopen and restart domestic flights, and the plan was that they will be restarting about 55% of the flights that they did the previous year. So it's just slightly over half of what their normal flight would be around this time period. And as a result of that, the share price, like American Airlines, for example, has seen a share price jump 41%, and that's just incredible. 41% jump in the share price on that announcement. So I mean, that's just crazy. And a similar thing happened with the cruise lines as well. And what we can see here is that Carnival and Norwegian Cruise, they've both seen double-digit growth in their share price, again because these optimism around possibly reopening. But the reality for them is that the no-sale order remains in place until July 24, and that may well carry on for longer. So I'm not really sure where this optimism is. Is this really misplaced optimism? I mean, opening up is a great thing, and the possibility of opening up is a great thing. But if, for example, with the airlines only running half of their usual scheduled flight, is not necessarily a good thing for them, because I can't see how they're going to be meeting their baseline costs running just half of what they would normally do. So that really is a concern for me, and I don't know, and I haven't got a crystal ball, but I think all of this needs to be put into some perspective. It's great, and it's great that the economy is opening, and I'm all for that, and that's what we all want to see. But some caution as investors. We have to look at the fuller picture and not get caught up in the euphoria. I think there is an element of FOMO which may be playing into this, which of course is fear of missing out. I heard on another podcast that it was referred to as panic of missing out, which is just crazy. That POMO is just the amount of buying that's gone into these companies. Even at this stage, when there isn't really any real data to say that they have actually opened half of the airlines and half have actually been running, and there hasn't been any issues with that. It's not even that, it's just the likelihood of them opening in July, and that's just, so there we are. That's the market for you. Market is basically built on sentiment, and is runs on sentiment rather than hardcore economic data. But when we look at the real data, it still paints a very bleak and gloomy picture. Bankruptcies are a big thing, especially with bricks and mortar companies at the moment, and that is probably likely to continue for a while, especially with the fact that we just haven't really had a cure or some sort of vaccine for this pandemic. So social distancing is going to be something that remains in our society for a while to go. So companies like entertainment industry and cruise companies and transportation companies, they are right in the thick of this when it comes to how society is supposed to carry on, and how day-to-day life is supposed to carry on. People have to social distance. How do you social distance on a plane or on a flight? How do you social distance on a cruise line? That's just a very, very difficult thing to do. But look, if it works, then I'm all for it. But a lot of caution is to be exercised. Anyway, so that's it for me for this episode. I hope you've enjoyed the video, and I'll catch you in the next one. And please do remember to subscribe. I'd love to get to 50 subscribers, and yes, so that I can get this out to more and more people. Thanks again for watching. Peace.